Welcome to my morning report of videos on Tuesday 22nd of November with me, Rich Perry, market analyst at Antech Markets. We've got a pretty strong positive open on markets today. Risk appetite has taken a shot in the arm, and that has come on the back of the improvement in risk appetite from the oil price. Let me just show you how treasuries are just starting to just consolidate really. And that is again another reason why we're seeing this sort of consolidation. Although the 2-year is higher, the 10-year is consolidating, and the dollar is just again mildly coming off. Yesterday was lower. Today, early on, it was reacting positively, but just lost a bit of momentum. Now, the big driver behind this improvement in risk appetite has been this oil price rally, sharply high yesterday on news that OPEC are sort of coming towards finalising an agreement to cut production, and also with this this jump at the open, I think is a contract rollover. But certainly the risk appetite is positive from this move, and we're seeing equity markets strongly higher. You're seeing Wall Street pushing out to all-time highs across the S&P, Nasdaq, and the Dow. Fixed volatility at a lowest since 7th of October and well below 13. So it's all positive for general sentiment at the moment, and that is what we're seeing on markets today. Certainly the dollar correction, which is sort of continuing really today from yesterday's initial move, and I'll talk you through all those charts. The euro and the yen are interesting ones, and also sterling. But in terms of what we've got to look forward to today, not a huge amount of important economic data, but certainly the where can I find it? Here we go. Certainly the initial sort of expectations are for public sector borrowing in the UK for a sort of 5.9 billion pounds, which could have an impact on sterling, so watch out for that at 9:30. Existing home sales and consumer confidence for the Eurozone consumer confidence basically flat. Existing home sales is probably the main one today. 5.43, again basically in line with last month. And also, interestingly enough, why don't we watch out for the Richmond Fed manufacturing, which is expected to improve to plus 1.0. So that would be the first time in 4 months that would be above zero, which is an improvement, shall we say. So generally speaking, I think this dollar correction that is threatening but not yet confirmed is going to be the sort of main talking point, as will the improvement in sentiment following on from the oil price. So let's see how that goes. But my chart of the day is euro sterling. Now, what we have seen is sterling had a big jump yesterday, big jump, and that came on the back of news that the UK government is sort of putting together a bit of a transitional agreement, sort of in the event that Article 50 gets triggered, and then you've got that 2-year window to come to an agreement. What happens at the end of that 2 years? Well, apparently the UK government are thinking about a transitional agreement with the EU after that. So that helped to generate sterling strength yesterday, and that pulled euro sterling sharply lower. And what you can see is this recovery, or this drive higher that we saw. That was the flash crash sterling day. It's basically been unwinding ever since then, and it's coming back, I think, now towards a test of this 83.30 level from the September low. You've got that bearish outside day, very marginal bearish outside day, which sort of continues the lower highs and lower lows drive from this chart. You've got the momentum indicators, which are negatively configured. Very mild gains today, I think, are going to be seen as a selling opportunity. You can see this on the hourly chart, whereby 85.60 has tended to be a bit of a pivot in the last sort of week or so. And again, I would expect that to be an area where the selling pressure could start to resume again, because I think the outlook is negative, and this little sort of uptick we've got on euro sterling today, I think is likely to be sold into although it'd be very interesting to see if the euros does begin to rally against the dollar, how sterling reacts in that environment. But certainly for now, you'd argue that euro sterling is negatively configured underneath all these moving averages, underneath this 85.60 level. I think that's sort of a little rally that gets sold into. Now the outlook would change near term if you moved above 86.40, which a couple of highs really there in the last two sessions, and I think that generally speaking we're still selling into strength. 86.40 generally speaking looks to be a bit of a resistance level now, so I still think there is room for further decline, further selling pressure towards 83.30, which is the September low. Yesterday's low 84.85, so it comes in as the basis of support initially, but below that you're sort of reopening that September low once again, and it certainly looks as though it's sort of coming back for a retreat into this sort of June, July, September support area. So I wish you good luck in your trading today, and I'll speak to you later. Thank you.